everybody, how's it going? We're going to get together tonight and we're going to create a strategy from scratch. Won't that be exciting? Now, I just want to tell you up front, I don't have anything to sell you. Apparently, I'm a horrifyingly bad marketer. So when we go through this, I am going to take my time and try to build this strategy up from scratch. I'm not hiding it from you. I'm not trying to give a big reveal at the end and ask you for $50,000. But what I do want is to maybe give you some information that you can use, maybe give you some information where you can start making money. I've got a mission. I don't want people to buy index funds. I want them to trade their own money, and I want them to do way better than the market. So this is my mission. I get to talk to you. So please don't get edgy. Every bit of information I'm trying to give here hopefully will make you better. So keep that in mind. We're going to get together. We're going to do a strategy. We're going to build it. I'm going to give you all the details, and then I'll teach you how to automate it. Won't take too long. And if you already know how to automate a strategy, then you can just plug your ears at that point. All right. And let's go ahead and move on to the next slide. Of course, I have to click it first. All right. Now, I am going to give some numbers. These are hypothetical numbers. They haven't come straight out of my trading account. Maybe one day we'll get together and I'll show you some actual trades, but we're building a strategy and we're testing a strategy. We're doing as good a job as we can, but these are hypothetical numbers. Don't risk anything you can't afford to lose. All right, what are we going to do today? Create a strategy. Big surprise. We're going to look at the results and we're going to discuss the results and see if it's anything useful to you or me. And then we will show you how to automate it if you're interested. Why automate it? We can talk about that in a little bit. Okay. Shall we begin? We shall. Let's create a strategy from the very, very beginning. It starts with this. Well, I mean, you can go anywhere on the internet and get all sorts of different ideas, and you can get easily overwhelmed. So let's not do that. Let's not randomly surf the internet. Let's actually build it with our brains. So there are really two ways to do this. Number one, use big data, right? Or number two, we could just use common sense and use our clear logic. Now, what is big data? Big data means millions and millions and millions of bars of code, or millions and millions of data points, billions of data points even, data that goes back years and years and years, sometimes even hundreds of years. Big data means data so big you can barely wrap your mind around it. That's usually reserved for not us, basically, but that is one way to do it. If you have data and millions, even billions of tests on it, with all sorts of data points on all time frames, if you did 1 million tests, you probably feel pretty good about that pattern. You're searching for patterns and it shows up over and over and over again through decades, maybe even 100 years. We probably feel pretty good. So that is a great way to build a strategy. So if you have access to Watson at IBM, or if you have data going back hundreds of years sitting on your laptop, that would be a great place to start. Now, am I being facetious? A little. Am I being truthful? Yes, I actually am. Why? Because I don't know if you saw it, but a very, very important book, very, very interesting book just came out on Jim Simons, who created a hedge fund from scratch, and he has made billions, plural. There is no question. I mean, it's not even close. Jim Simons' fund, Renaissance, is the greatest fund ever to walk the planet. Jim Simons, then, because he created it, is the greatest trader of all time. It's not close. Not Warren Buffett, not George Soros, not Peter Lynch, not anyone you've ever heard of. I mean, it's not even close. What do I mean by that? Well, Jim Simons' fund has averaged 66% a year for over a decade. 15 years, they have data going back, right? And they're still trading today. So actually it's more than 15 years, but I'm just talking about rock solid ironclad data for 15 years. 66% for 15 years, not once upon a blue moon, every year. Of course, it's on average. So some years it was 100 and some years it was 20, 66%, right? I mean, it's not close. What's Warren Buffett? 20? What's Ray Dalio? Like 12%? a year, right? It's not close. Do we get what I'm saying? Now, what does that mean, 66% a year for 15 years? Well, if you had a nice $10,000 account and you had 15 years of 66%, your $10,000 account now is $20,027,250.07. That's not terrible. Now you think, when people usually do these on webinars, what's the first thing that we all think? Yeah, right, those are fake numbers, fake data, fake news, whatever you want to call it. Jim Simons is worth $23 billion right now, okay? 23 billion. You know how much he started with? I think he was making like 40 grand a year, like literally created it out of thin air. So for once, we have a real person who has put up those fantasy internet numbers, and it actually happened, and it's still happening now. So why do I tell you all this? Because that's how he built his $23 billion fortune, big data. He started in the 80s. He started accumulating data. He actually paid academics to go find data, go to libraries, go to the government, go anywhere, and he would plot it out by hand. He started getting data in the 80s. That was when he started his funds, and then he would go back as far as possible. He may have the biggest data set of any trader on the planet. Other people have caught up, so there are maybe others close, but back in the day, he had more than everyone else. And guess what? He still relies on the data all the time, okay? So that is an option. If you're a computer whiz right now, start plugging the data, find a pattern, and trade it and make 23 billion. But I'm a regular person, hopefully, not hopefully, I would love for you to be an extraordinary person, but I am just a regular person. And if you're a regular person too, big data doesn't really matter to us. I don't have computers. I have a fast computer, I think. I pay for data. I don't have that kind of data. How do you get computers like that? I'll spend a couple $1 million or more, all right? And also, he hired PhDs from academia. That's who he hired. He didn't hire traders. He just hired the smartest people. Literally, he hired code breakers because he was one. He was a government code breaker. So he wasn't a trader. So he hired really smart people and had all of that data, okay? Again, they looked for repeatable patterns and went back as far as possible. We don't have that, but here's what we can take. We can take the principles. Even though we won't have the same sample sizes, if we can test with the data that we have, try to make it as reliable as possible, what we can take from is, Simon said he looked for repeatable patterns and traded them. That's it. He didn't question it. He didn't listen to snarky people on the internet saying, yeah, you can't trade, that pattern will break down, all systems fail. Didn't care about that. If the data said to trade it, he traded it, and we can do that for sure. Now, we won't have millions of trades, so maybe our confidence will be lower, or maybe we can use our brains and make our confidence higher, okay? But good news for us is that isn't the only way the greatest trader of all time traded. He also used common sense. Ha-ha! And we have that ability also. We can use common sense, and that, my friends, is the shortcut. At least that's what logic tells us. We can use our brains to not have millions and millions and millions and millions of trades. Now, what does that mean? Well, we have to start with an idea. And by the way, Simons did that also. He started with ideas. He doesn't just trade big data. He trades stuff that makes sense. For example, he takes a strategy, and if he doesn't know why it works, he may not trade it at all, especially if there's not enough data behind it, right? He does the research, but then he backs it up with common sense. Oh, clearly that's why. It sells on Friday. If you sell on Friday and buy on Monday, it's profitable over 30 years. Well, why? Oh, well, maybe on Friday, traders want to go away for the weekend. He did that kind of thing. He told a story on top of the data that made sense. We can do that. So let's take a common sense idea and make that the building block and start building our strategy. Okay, so what is an idea that will never change? Well, the sun rises in the morning, right? Always be taxed. There'll always be people lying on the internet, right? These are things that will always be around. Do you feel confident saying that no taxes tomorrow? Right? Nobody would be confident saying that, right? That is something that will always be around. So What trading ideas work forever? Well, value investing is one. If you are a value investor, more power to you. That's never going to go out of style. It's never not going to work. Double negative. How fun. If you buy something at 50% off in price, chances are you're going to make a profit. I mean, when is it not, right? If you're truly 50% off, and the reason it's 50% off is some sort of short-term anomaly, you're always going to get paid. Now, you have to make sure it's 50% off. That's the tricky part. But buying on sale will always work forever. And that just makes sense. If you get a good deal is a good deal. Well, that sounds great, but is there a system? Yes. And on the next slide, I will show you magicformulainvesting.com. It is a free screen. It is a stock trading screen. It is created by Joel Greenblatt, who actually trades a hedge fund, who's actually one of the most successful hedge funds in the world / America / universe. Now, he's one of the top funds trading right now. And what does he do? He is a value investor. So it's a real person trading real money, doing really well. Okay? I'll show you that in a second. So that's how we could build a system, right? And maybe some future time we'll talk about that. Or you can be a trend follower. Now, some people get a little uppity about trend following, and I'm not sure why, because it works forever. It will always work. It has worked. The data goes back 500 years, all the way up to 1200 years. It works, okay? Don't try to tell me there won't be trends anymore. Don't try to tell me that. Just look at Bitcoin just a year ago. Just look at futures market. There are trends. There's always trends. If you are a trend follower and you get in when it makes new highs and you short lows, it will always work to some degree, okay? You can argue if you want. It's futile. Don't argue. Is there anyone doing trend following? Well, the best example is Dunn Capital. That is Dunn Capital Management. It's a real CTA. You could invest, if you have enough money, you can invest with him tomorrow and his firm. Okay, these are real people doing real common sense trading. And guess what? Both of these are so simple. Magic Formula Investing, you buy a good company at a good price. Shocking. Trend following, you get in at a high. You get short on a low. Complicated, right? Now, I promised Magic Formula. Here's your first system of the day. Go to magicformulainvesting.com. There it is. You log in, you give your information for free, they never spam you. You get on as free, you run the scan, you click that button right there, say get stocks. You put in your market cap, say get stocks, and it gives you 30 or 50 stocks. What you do, recommended by Joel Greenblatt, you pick 7 of them, right, every quarter, and you build your roster up to about 30. You hold the stock for a year and 1 day to save the taxes, and you beat the market over time. How easy is that? This is an ad, but it's true. This Gotham fund, that's the one Joel Greenblatt trades now. It's in the 6th percentile of all mutual funds. He does very well, and it has for a long time. So there you go, statistic number one, system number one. Now here's Dunn Capital. It's a real thing. Like I said, find them, just Google Dunn Capital, trend followers, and 100% automated, no discretion. They've been 100% automated since 1989. Real quick, this program since 1989 to 10/19, they've made 4,171%, and the paltry market has made 1,558. Drawdown, yes, is slightly bigger, but that hasn't happened in a long time, by the way. They don't have drawdowns like this anymore. And the market is 50%, and that happens all the time. So Dunn Capital beats the market with a common sense idea, and he's completely automated. Oh, aren't we automating later? Anyway, okay. So that's all great. We've got ideas and we've got examples of people actually doing it, but we need a system though. We need to find something tonight. So those two are relevant, value investing and trend following. We can talk about that. But is there any other way? How about one more? Well, of course there is, or I wouldn't have said it. What if we go with the trend, we determine which direction the trend is trending, and we get in on a pullback? All that is buy the dips. Have you ever heard buy the dips? If you turn on CNBC, which I still like to from time to time, it's great entertainment. If you turn on CNBC, they'll tell you buy the dips, right? Crypto, buy the dips. still around. It's still in the lexicon. It's everywhere. Now, does it actually work? Well, as a neophyte stock trader, I made 100% in a year, actually over 100% in a year. I picked a stock, no longer trading, Ceradyne, body armor. And I bought every time it went down. I bought more because I didn't know better. And I made like 115% in a calendar year. Hooray, that's my first big win, right? So all I did was buy the dips. I knew nothing. I just bought the dips. So I've had it work in my life. I've seen it with my own eyes. The people on TV buy the dips. But actually, philosophically, it makes sense, right? No trend goes straight up with no selling, with no exhaustion, without any pullbacks. Something goes way up, and then, oh man, that's gone way up. I'll sell a little profit. Sell, and it comes down. But the trend's not over. Nobody is disbelieving now. Nobody thinks it's going the other way. And so then they start buying, and a new round of buyers come in. Same as a sporting event, right? You're watching a football game or a basketball game, and one team goes out and they go on a 20-2 run. That's the score. It's going to be 100-8. No, right? There's going to be a slight comeback, and then they're going to pull away again. So this is a universal principle. Buying the dips has been around because it should be around. It works. It makes sense. Okay, right? I ask on the screen, excuse me if it makes sense. Excuse me, and it does. Now, believe and buy the dips? Here's a chart of the SPY as I take a sip of water. And let's see here. This is 2020. Oh, so this must be 2019. How fortunate. The market goes up, and then it has a little dip. This is the 200 period simple moving average. Oh, if you bought when it came down and touched the 200 on a sell, oh, you made money. It took another breather, would have made a little bit of money. Took another breather down to 200, made a ton of money. Another dip, up, dip, and then up, and now it's dipping again. So does buy dips work? I mean, we can agree, right? It works, right? We're fine. Oh, so let's build our system on that, okay? But we're building a system. Man, this is hard work. How are we gonna do this? We found our system, or at least our philosophy, that makes sense. Right now, you could just take that SPY and buy the SPY when it hits the 200. I bet you'd do well. I bet you'd beat your friends. But there's more questions if we're actually going to code this system and build this system and automate the system. And that is, now we need to go trend or counter trend. Well, we've kind of already talked about that. So whoever wrote this slide is kind of stupid, right? Counter trend is great. Value investors are counter trend, right? It's, oh, price is 50% off, I'm going to buy it. But I already said that. So we're going with the trend. But if you're building a system, here's your checklist, right? So I'm trying to help you do this on your own. So first, trend or counter trend, we've already said that. Now, what time frame charts? This is a big one. I always thought that to be a trader, you had to trade the 5 or 15-minute charts, because otherwise you're just a sucker and you're a long-term boring trader and you don't know anything. I've learned very differently, but anyway, you have to pick it. Now for today, and I would kind of recommend building your system, especially if you're building one from scratch, go to long-term. Why? Long-term signals are better signals. What does better mean? They work when you, like, for example, there's a dip, it shoots right back up. On a 1 minute, 5 minute, 15 minute, if it goes down, it may stay down. There's no guarantee it's coming back. So I like powerful signals, and powerful signals live on the big long-term charts. What does that mean? Daily charts, 240-minute charts, something higher than 240-minute charts, higher than 4-hour charts, okay? Plus, if you have a day job and you're building a system, you'll be able to trade this discretionary, right? Now, of course, you can automate it and it's all fine, but if you don't have automation, then long-term charts are best. You can still make money and still make money in your job. Oh, look at all that writing. By the way, if you're making PowerPoint slides, never do this. This is very, very poor PowerPointing. But anyway, this is your checklist, right? So what market should we trade? Well, we want to make money, so we need leverage. We could trade stocks. I get it. You can make big money in the stock market, but there's thousands of stocks, and there's a pattern day trading rule, and it's just complicated. And if you trade something like Pfizer, then it may not go anywhere. I mean, it's just too hard, right? At least for tonight. So let's do something with leverage. So that means futures or Forex. That's all we got. Those are the big leverage guys. And futures is a little more complicated. You've got rollover, you've got this and that, you've got soybeans being delivered to your doorstep. Not really, but maybe. So let's pick FX. Now, we still have the leverage, but we don't have soybeans and sugar being delivered. But most of all, most traders start off with small accounts. Most traders don't want to risk 100 grand on their first system. And guess what? There is no better market for small traders than FX. So we're doing that tonight. Maybe you just have a small account. So you can use big accounts too. So we're picking FX. We got the leverage and we have the ability to trade it on a small account. Well, how are we getting in? We already said pullback, but what does that mean? We don't want to guess. Well, we're going to use an indicator. Why? Because an indicator is cut and dried and clear and easy. If the indicator pulls back, it goes down, that's it, no discussion. We have discipline, we have the ability to code it and make it automated. There's nothing opinionated about it. We're going to use an indicator. Perfect. How do we go with the trend? How do we even know what the trend is? A lot of different ways. You can use the momentum indicator. If it's above zero, guess what? The trend is up. You could use MACD. If the MACD is up above zero, the trend is up. I like to use moving averages, either a moving average cross, oh, the trend is up. Or even simpler than that, this is crazy, just have a moving average, a simple one, SMA, and put a simple number on it, meaning something that other people use, like the 200. Everybody knows the 200, or 50 or 100, right? Just multiples of that. Don't use the 47.2 to try to be clever. Let's just use something normal because we don't want to curve fit anything. So that's how we're going to go with the trend. If price is above the long-term trend, the trend is up. If price is below the long-term trend, the trend is down. That seems to be easy. Next number. All right, what's our target? We got our trade, we're getting in on a pullback. What's the finish line? And here's the big one, what is our stop loss? Well, I use stops, I use targets, okay? Nothing wrong with that. Here is something that's potentially wrong with that though. If you use targets and stops, you might over optimize. What does that mean? That means, let's say you go back, you only have a little bit of data, you go back 3 years, and you put a target on it and say, $1,000. $1,000 works great on this trade. Well, it's worked in the past 3 years, but what about the 3 years before that? And what about 2008? And what about 2006? If you go back, may not have worked back then. So one target works for one market, but another target works better for another. See, we get into trouble. There are ways around this by testing, and getting tons of data and tons of trades. But we're not doing that. We're keeping it simple. So we're not going to use a target. I know. Seems crazy like Fox. And we're not going to use a stop loss either. Now that is probably making people punch their computer screen. Or if they're barely listening, that might make them half raise an eyebrow. But we're not going to use a stop loss. Now, you could. I'm going to give you a system, add a stop, knock yourself out, test it. But we're not going to do that. Why? Because the same thing. If we over optimize, our stop might be close for one market, too far away for another. We might take losses that are way too big, and we might get whipsawed to death if it's too close. So here's how we fix that. We're letting our indicator get us in and our indicator get us out. The indicator, for example, an RSI, when an RSI goes for oversold, chances are, according to the indicator, price is going to go up. And when it goes up into overbought, chances are it's exhausted and it's going to turn back around. So we'll just do that. Why? Because that's going to adapt to every market. It's all relative, right? If you use a relative strength, it's all relative. When it goes up to overbought, we're going to be good. That's enough. The trend is over. Okay? So we're not using targets, we're not using stops, but we are getting a quick drink of water. So what indicator should we use? Well, I just said RSI. I love RSI. But we're not going to use RSI, not this time. I love stochastics. One of the very first indicators I ever tested. But we're not using stochastics either. We're using the commodity channel index, the CCI. Why are we doing that? Well, it's similar to the RSI. It's got overbought, it's got oversold, so it allows us to get in and get out and use just the strength of the actual move, not some arbitrary stop and target number. It's been around for a long time, and it's not that popular. If you do what everyone else does, you'll get the results everyone else does, and we're going to try to be different. So it's been around the block, but it's also a little bit off the beaten path, so we're going to use CCI, okay? So let's summarize. We're building our system. Pullbacks with the trend. We're going to determine the trend with our simple moving average. We're using the 100, by the way. 200 populars, 50 popular. Let's go somewhere in between those. We're going to use daily charts. Now, 240-minute charts, again, would be fine, but not today, not for this trade, for this system. We're going to use the FX market because we can use any size account. We still get good leverage. We're not using any targets or stops. We're letting our indicator get us in and get us out, and we're going to use CCI. I did no optimizing on the CCI, 0. It is the default setting of 14. That's how my platform goes. So length 14, oversold, -100, overbought 100. That's just how it comes out of the box. Okay, I did nothing to it. All right. Well, we're almost there. We're in FX. But what pair in Forex? What are we going to use? We got 20, 30 pairs to choose from, right? Well, anytime I'm picking a system, my starting point is the big three. I call it the big three: the euro dollar, the dollar yen, and the pound dollar. Why do I call them that? Because they have the highest volume and they're the most popular. That's great. Here's why I really use them. They have the highest volume and they respond to systems very, very well. If you get more exotic, signals don't work. They get a little crazy. Stuff goes down for a long time. It goes up for a long time. Those big three, euro dollar, dollar yen, pound dollar, respond to systems, respond to patterns, I've found, and they have big, big, big volume. Aussie dollar and the dollar Canadian also have big volume. I don't like those, so I didn't use those. I'm sorry. If you like them, I apologize. And of those big three, today we're doing the pound dollar. Why did I pick that? Because the British pound has been in the news with Brexit and other things, and it's so hot right now, just like Hansel. Anyway, here is, hey, some trade examples. Now I put some lines around trade I'm talking about, but there are so many trades on the screen, and hopefully you can see it. I don't know why PowerPoint makes this little ribbon here. I probably could make this bigger, but I'm not going to. Hey, guess what? The trend line is here. It's not a trend line, but it's our trend. It's our simple moving average that determines a trend. If price is above the trend, we're going long. If price is below the trend, we're going short. We're going with the trend. Oh, prices moved up, but we want a pullback. It pulled back, and believe it or not, this closes below -100. It's like -100.4. It's barely, but it did. Because of that, that means, haha, it's time to get in. You get in manually, or you have the robot do it for you. And what's our target? When price gets to overbought. We get in here and we do not leave the trade until it closes up into overbought. Sometimes that'll be a big win. Sometimes that'll be a small win. We don't know. We're just letting the market take us where it wants to go. So that's a trade. Here's a long trade. Closed into oversold and didn't do much. Closed into overbought, done. Another one, closed into oversold, kind of went around everywhere, closed into overbought. Oh, this is not good. I shouldn't show you this. Price pulls back into oversold, and it keeps going. That is a miserable, terrible loser. And when do we get out? I wish we would have got out here, but it didn't make it an overbought. Oh, there it did. We do not exit until we get there. So that's a big loser, and that's just part of the deal. Oh, but guess what? We're below the simple moving average, so that immediately sends us a short trade, and we got a winner there when it closed into extreme. So that's a whole bunch of trades. That's the good and the bad. That's the sideways, that's the winners, and that's the losers. That's our system. We're letting our indicator do the work. I feel like, excuse me, you're being skeptical. I feel like you don't believe in our system. Well, let's keep going. we have a system that makes sense, right? There's more than one, but it makes sense. Long-term charts, it makes sense. Not using a target, you probably hate it, but we're just going with the flow. Not having a stop could be scary, as we just saw, but it is going to adjust with the indicator. It will go up into overbought at some point, right? It will go extreme. How you feeling? Skeptical? Well, here are the results. This is from late 2003 to 2019. Pound dollar trading one lot each time. One lot each time. Here are a few sample trades, right? Goes down extreme. And there's, all right, so I kept that on there for you. $75,437 of profit, so 75 grand of profit. Our max drawdown was negative 25. We got 112 trades, okay? It's definitely profitable, no doubt about that. Maybe it's not good enough for you, but we made a common sense system with no optimizing, zero optimizing, and it made a nice amount of money, right? Here's what's interesting. This is on MT4, which we're going to talk about when we automate. So probably the best place to automate a Forex system that we have as normal people. That's MT4. I took the same system and coded it for TradeStation. TradeStation doesn't trade Forex. I know, it was heartbreaking for me. But I coded the same strategy and I took it into a different platform. And check this out. $76,000 of profit and negative 24 drawdown. Wait a second. Almost 76 and almost 24. See what's cool about that? I like to see this. Two different platforms. They calculate indicators completely different. They calculate even their moving averages sometimes differently. And yet we came out with very, very similar results. Almost the same amount of trades too. Isn't that interesting? So I feel like we're getting a little more robust. Here's your equity curve, right? We want low to high, left to right, and it's definitely doing that. We don't have a stop loss. Think about that. And this is rough, but then it bounces right back. And now it's doing quite great in recent times. That's a pretty darn good looking equity curve. Well, I know what you're saying. Not enough trades. Well, I hear you, right? We would love to have the sample sizes that Jim Simons had. Still has. Anyway, of course we would. But we don't have that. We have a simple system. Are we screwed? Can we not even think about trading this? Nah, not so fast, my friends. There are ways around this. We used a ton of common sense in this, right? Common sense sometimes trumps sample sizes. We didn't do any optimizing. We just used our brains, okay? So that in itself should make us feel pretty confident. And if your philosophy is universal, if your philosophy never changes and will always be true to the end of time, do we need millions of trades, right? If you think you know what Apple is worth and it goes to 50% off, or if you get a brand new iPhone that's 50% off, you don't need optimizing, right? You just pull the trigger, right? So common sense does get us around that. But there is a way to get more trades. You take the same system and you just put it on other things. No optimizing, so we can just put it on. The more pairs we put it on, the more trades we get. And we can get what I call accidental backtesting numbers. We're not actually running the tests, we're just applying it to different pairs, and we're getting our sample size up that way. So that's a problem, but we may have a solution to that. You may not have liked the drawdown. I would love for it to be lower, but what's a way around that? You trade more than one thing. When something's going into drawdown, wouldn't it be great if something else was not? So what else can we trade? Well, again, we're not optimizing, so we're not going to go in and do the research. We're just going to guess at it first. We don't have a stop loss. So what pairs should we not trade? I'll sit while you think about it. What are the hardest trending currency pairs in the business? JPY pairs, the pound yen, the express, right? That's what I call it, the evil express, because if it's evil, because if it goes against you, it goes a long way. The dollar yen, big trender. Canadian yen, the yen pairs, euro yen, euro yen. Anyway, foreshadowing. I stayed away. I just didn't even test the JPY pairs. They might work. You can test them for yourselves, but I thought, let's do something that doesn't quite go so crazy. Let's stay with the USD pairs. Yes, they can trend. I get it. Yes, absolutely they can. But most of the time, they're more reasonable. They don't go savage as often as the JPY. I'm just spitballing here. Okay, so I'm just guessing. So let's find some pairs that say USD in them and trade them. Well, here's some that have USD. Let's see, Euro USD has dollar Swiss, Aussie. I said I wouldn't trade the Aussie dollar, but I did. And dollar Canadian, I did anyway. Okay, dollar, 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 dollar. So there's 5 more currency pairs that had dollar in them. So I thought that would be fine. So I ran the test, same system, and here are your numbers. Euro dollar made 32 grand. New Zealand 28, dollar Swiss 26, dollar 25, dollar Canadian 16. It's not 75, 76 like the British pound US dollar, but with no optimizing, we still made money. Is it possible, plausible that one of these would be making money while the pound dollar was not? Maybe, maybe not. That could be the fun experiment we could have. But look at the trades. Again, with no optimizing, see how many trades? Now we have 500 more trades. So now we have over 600 in our sample size. How do you feel now? And would all of these lessen drawdown? Well, we'd have to put them on a chart. We'd have to plot that, and that would take a lot of time, but certainly, right? And now our profit's up at 200K. Now, I said the euro yen, by the way, the euro yen did fine. It had 39K of profit, but we didn't include that. Okay, well, let's finish up now by automating it. First of all, if you could trade this discretionary, right? You could trade this by yourself, but let's say you don't want to. You'd rather have the robot take all the trades. Well, this is where you can plug your ears if you already know. And there are tutorials on this all over the internet, but you're gonna get it here real quick. This would be easy to build, so hire a programmer. You have all the rules. You just need to code it now for MT4, which is free. You just needed an MQL4 code. What does that mean? Who knows? Find someone who does it. They're everywhere. And then these simple steps. This is kind of boring, but I promised you, if you, like, say you bought a robot from me someday, right? Then I would give you the EX4 file, you drag it to your desktop, right click, you copy it. Then you go, I'm gonna show you a picture too. You go to File, Open Data Folder, MQL4 folder, Experts, and then you paste it in the Experts folder. There are your steps right there. You hit refresh on the navigator and the Expert Advisors file, and then your EA, your advisor, will show up, and then you just literally click and drag it onto your chart. You just got automated. How did it feel? If you have a smiley face in the upper right-hand corner and your auto trading button is green, you could trade this system tomorrow or even tonight. There's your file, copy, file, right? What are our steps? File, open data folder, MQL4, do that right there, file, MQL4, experts, click on it, paste, go to your navigator, expert advisor, right click, refresh, and then make sure your auto trading button is green. If it's red, it won't take trades. If it's green, and something like this, I tested it in MT4, the one we talked about tonight. So that's how to do it. All right. We've got several systems from scratch. We tested several currency pairs. We had $200,000 of profit. If we traded them all together, we'd have to do research on the drawdown, of course. We just traded one lot, 2003 to 2019. If you automated this, right, you could be like your hedge fund manager. You'd have all these going, right? You'd want to make sure you're 100% ready to go, but you could be a hedge fund manager. Again, why share this? Why give you free systems? Because maybe you can join my free newsletter, right? That's free, and we can talk about systems some more, or you'll go make money, which is what I want. And there's my contact information, and that's all I have.